In the previous two videos, we have discussed how a conservative investor and a moderate investor should invest his money. And in this video, we are going to understand how an aggressive teenage investor should invest his 50,000 Indian rupee and how he should allocate his portfolio. So without any further ado, let's get started. The first thing will remain same as the PAN card is the mandatory thing to create a demat account and start investing, right? So let's get started. Here we have two approaches. In the previous two videos, I have also told about the two approaches, and the same we have here two approaches to invest, right? So the first is invest in small cap funds. Having a high risk taking ability enables the potential to invest in small cap funds, and it simply generates high return, right? Because we have invested in high risk, we have high risk taking ability, so we should invest in small cap funds, and hence we will get better returns compared to any other mutual funds, right? So it contains a significant amount of risk, but at the same time, if we invest for the long run, let's say for at least 10 years, we will get outstanding returns. I have expected here 14 to 15%, but you may get 16, 17 or 20% return, right? So that is no limit in small cap funds, because small cap funds includes small companies, and if small company gets amazing future, it will become a fortune for you, right? So in the small cap funds, you will need to invest 30,000 Indian rupee, and keep that in mind that you will stay invested for at least 10 years, because when it comes to small cap funds, it has the highest volatility, right? So markets may go up and down, and you will see a huge volatility in small cap funds. But if you stay calm and patient and stay invested for at least 10 years, you will get outstanding return, and that is what the benefit of small cap fund. So the second approach of investing as an aggressive investor is that you should invest in blue chip stocks. Now I have mentioned here blue chip stocks only, where most teenagers believe that they should invest in the stock which has a low price, but there is no concept that you should invest. If you invest in low price stocks, you will get high returns. We have to check the fundamentals first, but most teenagers fail to analyze that. That is why I have suggested blue chip stocks that has fundamentally sound, right? So if you invest in blue chip stocks like Reliance Industries, TCS, Infosys, Hindustan Unilever, Pidilite Industries, companies like this, you will get a significant amount of return in the long run. You can expect more than 20% year on year return, because if you stay invested for at least 10 years, you will get amazing return. And if we talk about how much money you should invest, here I would recommend you to invest 20,000 Indian rupee, and I would recommend you to select two specific stocks where you should invest, right? So don't invest in more than 4 to 5 companies, because you have only 20,000 rupees. So if you have more amount, then you should diversify your stock portfolio, and it contains a very high risk. That is why you don't need to look after investing. So if you invest right now, if you invest today, then you don't need to look for at least 10 years from now, because we have invested in stocks, right? So it contains a higher amount of risk and volatility compared to mutual funds, right? Mutual funds include diversification, because it includes multiple companies, whereas if we have invested in stocks, that we become reliable on a single 2 to 3 companies, right? So there is risk definitely, and that is why I have included stocks in only aggressive investment portfolio. So this is how you should invest as an aggressive investor, And if you stay invested, trust me, if you stay invested for 10 years, you will get outstanding return. So let's look at the returns and what amount we can expect after 10 to 15 years of investment period. So while investing in small caps, we can easily expect high returns. If the fund and the stock which we have invested is good, we will get outstanding return. So I have considered here 16% return. If we stay invested for 5 years, we will get 110 more than 110,000. If we stay invested for 10 years, we will get 245,000 Indian rupee. If we stay invested for 15 years, you can see the massive jump from 10 years to 15 years is that 542,000 Indian rupees. So that's how the power of compounding works. If you are young, if you are a teenager, then you should definitely go for this portfolio if you have an aggressive investing mindset, right? And make sure that if you don't have the aggressive investing mindset, then you should not you should avoid this type of investing, because it contains a significant amount of risk. Whereas if you go with a conservative and a moderate mindset, then you also get a decent return, right? There is no loss. You are getting better returns than bank, FD and all the things. So I hope you like this video, and do share with your friends, and I will see you in the next one.